Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel. It's another trading weekend and as it's our custom, we'll be looking at top-down analysis of a Deriv synthetic index. As you all know, this channel is dedicated mostly to the top-down analysis of different financial securities using pure price action trading strategy. So without wasting much time, today we're going to be looking at the analysis of volatility 100 index and currently on the monthly time frame. So if we look at this particular index, it may seem to a lot of people that this would be like something really difficult to analyze. Now, why am I saying this? If I take out this horizontal ray and I place it here, you see that from the month of August 2023, this particular index has been ranging from 2023 and the month of August 2025 just ended. So that means for the past 2 years, this particular index has been in a range. So as you all know, on the monthly time frame, we try to get a directional bias. So what I would do would be to map out this range because we can't really see much because it seems to be going up 1 month and coming down the very next month. So for us to see this range better, to know where it is currently heading, because of course we know that in a ranging market, we buy from the support and we sell from the resistance. So having that in mind, let's now go to the weekly time frame. Okay. Now, because I've been able to map this out on the weekly time frame, we can see clearly the range of the market and I can now easily mark it out. So I can place this here for the support of the range and of course this would be the what? The resistance of the range. Now this makes picking our direction much more easier. Now from the range, you can see that the price left this resistance zone, came to the support, went back to the resistance zone, came back to support, went back to the resistance zone, came back to support, and of course, price is currently heading towards where? Back to this what? You can see that price is currently heading back to the resistance zone. So therefore, we can now confirm our directional bias to be what? Bullish, to be what? Upwards. Now, having this in mind, let me take this map out so that we can concentrate properly on what we are dealing with. So this is what we are dealing with. Of course, now having confirmed our direction, for those that have been following me, you also know that what I try to do on the weekly time frame is to, now that we know that, okay, this market is going upwards, the question is, how is it going upwards? What structure are we going to be working closely with in order to guide or look at, or in order for us to be guided on the upward movement? Of course, we cannot just buy because we know now that it's going upwards. We're still on the weekly time frame. We still have to look for a methodical way to work our way to the much lower time frame where we can take our buy trades, because right now we're looking for buy opportunities. So I'll go to the line graph, and on the line graph, the structure that jumps quickly to me is this W chart pattern, and I have a full video on the channel on how to trade W chart pattern. But just to quickly do this, the first thing would be to map out this neckline of the W pattern, because most times, if I'm to just do a recap on how to do that, if you have like a W chart pattern, what you do will be to what? Mark out the neckline. So since price had already taken out the neckline to form the W, you wait for price to make a retracement back into the neckline before looking for what? Your buy opportunities. However, like I always say, this is usually the textbook explanation of this pattern, because most times we find price coming um, below the neckline to take out liquidity, to grab liquidity, and then it finally gets towards to start moving upwards. So this is the simple explanation. So if we were to apply this simple explanation to what we have here, it simply means that we're expecting price to come into this place, probably even break below this neckline, and then we'll start looking for what? Buy opportunities. So now, having this structure in mind, the next thing to do would now be to go to the daily time frame, which I call the tradable time frame, because it is the most recent trend that we get from the daily time frame, which now tells us if we are going to be buying the market or waiting for the market to give us buy opportunities. So I go to the daily time frame. So now from the daily time frame, we can see actually that the market made low, but the lower high that gave birth to this lower low has just been conveniently taken out. However, another interesting thing that we can see on this daily time frame. So if I'm to bring in other confluences, you can see first of all that this trend line has been broken. The bearish trend line has been broken and even retested a little. However, price came back to this neckline, now forming what? Another chart pattern, which is what? A double bottom. And as we all know, a double bottom is a strong bullish reversal pattern. In other words, once a double bottom appears at the key zone when price is going downwards, then there's a strong probability that the price is about to start heading upwards. So now our concentration, apart from the fact that price had come back to retest the neckline of the W pattern that we saw. This is the W pattern if we were to draw it. Price came down here, came up, down, and then went up to form the other leg of the W. Now, price made a retracement back into the neckline. Now, in coming back into the neckline, we're spotting what? A W pattern, which is giving us another confirmation that price is about to head upwards. Remember, first of all, our first take was that we have price on a support zone of a very, very long um, consolidating market, ranging market, so to say. So we said the market has been ranging for exactly 2 years, from 2023 to 2025, and that in a ranging market we buy from the support, and our price is currently at the support. So on the weekly time frame, we looked for a structure to work with. We saw a W chart pattern. I just explained how to trade it, and now going down to the tradable time frame, the daily time frame, we are seeing that on the retest of the neckline of the W pattern, we are seeing a double bottom, which is another very strong bullish reversal pattern. So to quickly talk about how to trade a double bottom, all you simply need to do, I think I've explained this severally, is to wait for price to do what? The best way is to wait for price to come break the neckline. Once there's a retest, we take our what? Buy trades. And just like I explained earlier, this retest could come downwards grab liquidity before price goes in the upward direction. So having this in mind, that means we now have an idea of how to take advantage of this market, because like I always ask, after all these confluences, how do we take advantage of the market? So even if I'm to include my other tool which I use in trading, which is the Fibonacci Retracement Tool. So if I'm to take it from this swing low to this swing high, we can see that price just came into our golden zone, just tapped into our golden zone, which is the zone between the 50% and 61.8% mark, tapped into it and is currently heading upwards. So back to my question, how do we now take advantage of this particular setup? So we'll come here now towards complete this double bottom. So what we'll be waiting for will be for price to conveniently break above this bottom, which above the neckline of the double bottom, and make what? A retest. Then we can start looking for our what? Our buy trades. So if we see, because price is heading upwards, we can even include our what? Uptrending line. So this will be the first touch of the trend line, the second touch of the trend line, and just like I explained, price will be expecting price to break above the neckline of this double bottom, come back to make a retest, probably come in to even make a third touch of this bullish trend, and then we can start looking for what? Our trading opportunities. How do we do that? You can go further to the daily the H4 time frame or the H1 time frame, as the case may be, and start looking for what? Your trading opportunities by way of maybe inserting a counter trend line or looking for other bullish reversal chart patterns or candlestick pattern. So, like you all know, every weekend we try to do this for those who trade the Deriv synthetic indices, because of course we know that the currency market is currently on break. So for those that trade these indices, this is my outlook or my analysis on this particular index, volatility 100 index. So like I say, you can always compare this to your analysis, because no man is actually an island. You can compare this to your analysis and it will help you make better trading decision. So if you've gained anything from this analysis, I would only want to plead that you click on the like button. You can share this with others to gain from it as well. This is the Trading Academy. If you want to learn how to analyze the charts masterfully like this, you can always reach out to us via the contact on my YouTube channel. As you all know, if you want to, our September class is just started um, last week, so we haven't gone far. If you are a beginner trader and you're looking for means to shorten your journey, you can reach out to us as well. So do enjoy this short trading weekend, and cheers.